Welcome back to another video, everybody. I want to take a look at the daily chart on NAS. Let's see what's going on here. Right out the bat, looking at this gap right here. These two lows equal lows down here. Let's see. Low on that candle 29, 119, 29, 116. So this did go below this by a very small amount. Let's zoom that in here. Just barely traded below that. Looking at this gap, and I'm looking at this one. These are daily fair value gaps. Looking to the left, looking at this high. To me, that's an old high that's swept. Okay. So we're working inside of thus far the range of this low to this high. That's what we're working with. We haven't traded below. Did we trade below this with a lot of conviction, a lot of movement? The answer is no. Candle body closed above this low. Okay. We expanded below this low, but this low right here is going to be the one that you want to see trade through before you start looking for something in the long term for shorts. Okay, we had this liquidity taken here as well. Let's look at a weekly chart for a sec. On a weekly chart, we still have this high, relatively equal highs resting in place above here. Okay, June 26th. First of June, 15th, 22nd, 29th. These are still in play. All still in place. I want to quickly pull up the seasonal tendency. You're not going to be able to see that. I want to take a look at that and I want to give that through to you. NQ, seasonal tendency. Let me bring this up here so I can see this. Seasonal tendency, August. Now, as we all are aware, July and August are summer months. ICT talks about summer doldrums, right? July has been kind of trading, kind of not trading. For me, for the most part, not trading. Not trading. I was busy in some personal stuff for 2 weeks. I was kind of busy. My office was kind of like kind of a mess. I had some stuff done, and it was kind of a mess. My old setup wasn't using my setup, and yeah, I was kind of busy, in the house, busy doing some stuff. So pretty much about a week that I didn't look at trading, and pretty much another week where I was busy doing things and sorting things out just to get stuff, just to get things back into order so that I'm able to sit back down and do the charts. But I'm very well aware that we are in summer doldrums, and I expect price to be slower, choppier, high resistance liquidity runs. So I'm not expecting massive things, big things, and yeah, no FOMO. No FOMO is experienced here. Uh, Prior to that, the model, the 1 hour um, Jade's model with a stop on. We look for a stop on, look for price to reject, and then close back inside the range and look for that didn't present for a while. That's not presented. It didn't present. There were a couple of those setups that yes, they do present, but it would be like at 2 a.m. or it would be prior to market open or it would be at the PM session. And those are times where I don't sit down and I do not trade. Okay. So, as far as me looking at, did this present in the AM session? The answer is no. It did not present in the AM session. Okay. If you're trading PM, if you're trading Asia, if you're trading London, then perhaps that's still presented in your market and that was still in play. But for me, for AM, it's not presented as much as it did 2 months prior. So that's why that's been quiet. Not much has been posted because there has just not been much to really post about that. I haven't traded this week. The model didn't present yesterday. I believe. Well, we'll look and see if it did present this week. But I know for a fact that we had. Let me pull the calendar up. Last week. Let me just go back. Last week. Last week we had CPI, which that was a wrecker. That was a wrecker. Okay, that was a wrecker. And we did have a couple of really big moves, really good runs that took place, which I was not a part of. But like I said, I was busy. There were things that I had to sort out and things that I was busy doing. So I didn't get to the market. Do I feel FOMO? No, I don't. Because those were things that I needed to get done. So it's just a part of life, honestly. I mean, like with any regular job, if you got things that come up that you need to do, you obviously need to do them, and that's just how it is. Okay. So I know for a fact that there probably w- was a couple of setups that I did miss out on, which didn't get covered and so on and so forth. But it's just one of those things. As far as this current week, the calendar didn't really have much going on, except for Wednesday, we had the FOMC meeting minutes at 2 p.m., which is not the two-stage delivery, and we had Trump speaking at 2:30 p.m. session. And for yesterday, there was not anything in the AM that would have been taken. Okay, if I look at this here, then this low right here, if you pull, let's go ahead and do this. If I extend this out, because that's what I would have been looking at. I would have been looking at this AM low, pull it out. Okay, great. We traded below this. Did we ever come back and close above this? We never did. We never did in this range. Okay, so nothing there as far as AM. Nothing there. That's it. Done. Okay. If I look outside the scope of AM and I start looking at PM and Asia, yeah, I'm gonna find a setup, of course. If I start looking at it like that, and I start looking at, okay, 8 a.m., extend that, and we can go in and we can extend the high here too, which we didn't obviously trade that. We traded the low at 2 p.m. Traded the low, bam. So you would have to wait for bullish candle. So you would have to wait for this 3 o'clock. So you would have to go in at 4 o'clock. So there's another problem for me. 4 o'clock. 4 o'clock is pretty much when market closes. So that setup is not going to be one that I would really look to take. Let's go ahead and look at it anyway. Hey, so 4 o'clock. There just wasn't anything. There just was nothing here. Okay, 15, 6, 4 o'clock. I mean, what are you going to trade up there? You're going to wait until it comes back down to this, that clears this low, trades into the fair value, trades into extend beyond this big gap because you got a set of down close candles, rallies up, and that's it. That would be the theoretical trade. That would be it. Now, if we look at a 30-minute, right? Let's go and look at that same setup. 30-minute clears the low at 2 o'clock to 2:30. I still wouldn't feel any conviction with this bullish closure. It needs to close up there and show me that it really wants to get above this. Okay, so 3 o'clock. As soon as it then closes on 3 o'clock, I would be able to 15:30. I would be able to go in and I would be able to look for something. 15:30. Again, then we're still at the high. We're still at the high. So there just is not going to be an A plus in here. There just isn't going to be anything. That's just how it is. There just is not going to be something to key off of there. Something that's going to be high probability is just not going to be there. You're not going to find it unless you start looking at even that. I mean, the model just does not present. Okay, it just it just doesn't present clean for me to take. It doesn't convince me to take it. That's just it. You look at this low, straight below that, and you go to a 5-minute. I mean, you could get a trade, but it's gonna be something from uh, a different approach. You're gonna be able to get a trade. Yeah, you're gonna be able to catch this reversal. You'd be able to catch that like massive rally. So we're expecting a reversal. You get in on the reversal right there because we take what we grab the liquidity. As soon as we grab the liquidity, it's not a pattern. It's not just a pattern of me entering on a pattern, but it's we took out the liquidity, so now it's a valid setup to enter on. So you can fathom something from a different approach and get into a trade there. Let's go ahead and see. Let's look. Let's look. Let's look. Let's see. Let's look at a 4 hour down. First things first, Wednesday price action. I mean, Thursday. I mean, to me, if I look at this, my eye would see the low, see the fair value gap, and I'd be like, bam, it's a bearish draw. That's it. Bearish draw. So preferably, I would be looking to sell it off until it gets below this low. I'd be looking to be short. Right. That will be what I would be doing. I'd be looking for shorts. Reasons to sell it off. Hmm. One hour. That's Wednesday. Wednesday Eve. Thursday. What's this high? 29,593. 295. See, this does go above that. It goes above it by barely, but it goes above it. Look at the time. It's 2 a.m. So that's London. That's London session. Trades above that. Massive rally down. This gap. Okay, the gap. I'm bearish. Bias is bearish because I want to trade down into the this. Okay, this fair value gap high. That's the low of that candle. That's the low of this candle, right there. So look at that. This is a 1 hour fair value gap. 1 hour fair value gap. And then you work it down, work it down, work it down, work it down. You can go down into a 15. 15 makes it beautiful because why? Because we got this high sitting here. We trade above that. So that's a liquidity sweep. So liquidity sweep comes into play. That gives the setup a higher probability because now you're not just again trading a pattern. You got higher time frame liquidity behind you. You have a liquidity sweep because we trade above this high on a we trade above that 15-minute high, so that's a liquidity sweep. Price trades into the 1 hour fair value gap. Consequent encroachment, 50% mean threshold of it. Okay, well, not mean threshold, but 50% of it trades into that. And again, this is going to be a setup it's pre-market, trades into it, and sells off. Trades into that, sells off. So unless you're taking it based off the idea it's trading into that, I'm selling it off because it's trading into the higher level. If you want to look for a lower time frame entry pattern, that's not given to you on the 5. Okay, it's not given on the 5-minute. You'll find that on a 1-minute or lower. Okay, it's not given to you on a 1-minute, so you're gonna have to start going into 30-second, 50. You're gonna have to go lower time frames to get that. But solely based on the idea that it's traded into 1 hour. Let's go back to 1 hour. Okay, 1 hour chart. 1 hour. I'm expecting bearish prices. Okay, from a daily time frame, expecting it to trade into this low, this daily fair value gap. Liquidity is below us. The draw. What's it doing here? It's ran lower. Okay, taking this low. It's done this impulsively because it's had a lot of momentum behind it. So it's done that. Pulled back up into 1 hour fair value gap. So that's a model right there on its own. All this was is consolidation, but you can say, okay, it's done this. I'm using this as my confirmation. I'll use this as my confirmation and roll it away. What's it left? It's left me with another 1 hour gap. Now I can start going down to a 5, a 15, and a 5. Okay, use this as a confirmation then if you want to do that. What happens then? You say, okay, I got the 1 hour. This is a 1 hour fair value gap right here. It trades into this. When does it trade into it? It trades into it 940. That's 940 to 1010, 950 to 1010 macro. Lines up with the time. And you can get a little trade out of that, and you can make your bank just from that idea. Okay, with everything in mind, using this as a confirmation and trade that, boom, rallied away, lift the gap, use the gap. You take one trade. Okay, one trade idea. What's beautiful here is the fact that on the 5 minute, there's an order block right there. Extend the order block. What happens? Price wicks through it. Yes, it's going to do that because why? Summer doldrum, month of August, not clean price action. So you have to tolerate that. You expect it to happen like this. So you plan ahead and you prepare for that. Okay, trade accordingly. And then what happens if you look at the candle bodies? There's my fair value gap. Consequent encroachment is right there. This lower one. Lower one. Lower one. Closes below it. Yes. Notice how even on this one, it's stayed below the consequent encroachment of the fair value gap. Notice that. So it's still below the 1 hour fair value gap. Consequent encroachment. Ding, ding, ding. Okay. Thanks. So that's a perfect trade idea, perfect entry right there, okay? As soon as it trades away like this, you can even take the entry down there. And you can still make enough. Still make enough. Or if you trade 1 minute, then you can go down to 1 minute and you can find your thing on the 1 minute and you can. Okay, 1 minute. Very similar approach. In this candle that closes below, that's your entry. Okay? Entry and you trade it down to this. So entry, trade it down to that. It's just cleaner in my opinion on the 5 minute because it's got the order block. Candle bodies are cleaner. Cleaner here. Once it closes, you can get in. I mean, trades down, and in this very candle that trades down, you target what? You just target the low. Target the low, just fill the gap right there. Target that. Look at how much it is. 24%. That's about 10 handles. That's enough. What time of the year is it? Summer doldrums. I don't expect much. It's choppy. It's messy. It's not going to give me much. So there you go. Simple approach, little model, little TDA top down analysis approach. Okay. So notice how it did not work, or it would have been a day that there would have been no trade if you used the JCap model on that specific day. There was nothing on AM and PM session, but there was something presented using the top down approach or top down PD array, top down analysis, using that higher time frame daily, work it down, find the draw on liquidity, which was obviously that low, and the fair value gap, which makes it easy because now I want to be short. And I go in looking for that, and then you can either trade this one if you're willing to take that at trades into the 1 hour, you take it. Or you use it as a confirmation and say, okay, it's done this, it's bam, it's traded down, it's left me this 1 hour fair value gap, and now I look for this, and then I take an entry off of that to go short. So that pretty much covers that. As far as seasonal tendencies, again, just to go back to that, for NCube, it's pretty much a flat month, other than the 5 year, which tanks towards the end of the month and then has a rally. And then DXY, which pretty much for the month of August sits sideways. Mid month, early to mid month has a rally, and then tanks off, and then has a retracement. So far for DXY, for the month of August, we've sat sideways. We've had one massive day, the 19th, where we've tanked lower. So thus far, it seems to me like we're not following the 35-year or the 15. Although on the 15th, we did have a slight tank. Beginning of the month with a higher high, which we've not posted. A higher high. And with a rally lower. So we've got 1 day lower thus far. So I see us following the 5 and the 15 year here, which is consolidating, tanking, and then pulling back, retracing. So that's what I see so far for that. So hopefully until we speak again, stay safe and good luck. If you guys are not yet familiar with Vantage, they are a forex broker. You can trade anything from euro dollar, pound dollar, to gold, to US 100, US 500. platforms they support. Or MT5, MT4, TradingView, they have an app, and they got a web trader. So they are versatile, as you can see over here. MT5, MT4, web trader, an app. So they have a versatile approach as far as platforms, what you can trade on, and a couple of things. Let's go ahead and take a look at the markets. Here you go. There's the markets that they offer. Forex, indices, energy, shares, CFDs, precious metals, soft commodities, ETFs, and bonds. Okay. Here are some of the account options here. As you can see, they have a minimum deposit of $50, which is not a lot of money. Now, take a look at some of the pairs. Here you go. These are some of the pairs with the spread. There you go, euro dollar, indices, S&P 500. Okay. If you're not familiar with them, check them out. So with that said, if you're looking for an opportunity to make some money on the side, whether you're going to use it for spending, save it up, whatever it might be, the channel has been approached, and we have a signal group that we're running on gold. And if you join through the link that's in the description, okay, if you go and you follow that Telegram group and you sign up to Vantage, okay, through the Telegram channel, through the link that they gave us, then you get access to that gold signal group for free. Okay. Don't have to pay for it. Don't have to use it. But you get access to it if you sign up through the group, through the link that they provide. So if you're looking for a broker, take a look at Vantage. Sign up through Vantage. They do also at times run a promotion. If you deposit, then they will give you a deposit bonus on top of what you deposit. So that gives you a bit more money in the account that you can trade with. So check them out. And the link will be in the description, as well as on the Telegram and as well as on X. So check them out.